Okay, let me just close. So there we have it. Boom, there we go. So today we've made about 193 USD. Yeah, what's up everybody, welcome and welcome back to the channel. We just got tapped into a long trade. It's around 9:03 a.m. in the London session, in my window. Yeah, so it's on 16th June 2026, and as I said, we just got tapped into a long trade, and as you can see, the moment I entered, we're already in profits. So we are in the blues, like around $27 in profits. Yeah, so let me explain why I got into this trade. So overall, in the higher time frame, we are bullish. When you zoom out to the higher time frame, we're making this series of higher highs and higher lows, higher highs and higher lows. Yeah, so as you can see over here, higher high, higher low, higher high, higher low, and then now right now we can anticipate for the market to go up and give us our higher high, or price might just be at this point where it is right now and shift to bearish. Yeah, so for me, I think the market is going to give us our next higher high. Yeah, so that is what the market is trying to tell us in the higher time frame. And right now, when we go to the lower time frame, let's say now the 15 minutes time frame, we can see we were in this short bearish trend. Like, we are making a series of lower lows, lower highs, lower lows, lower highs, lower lows, and this is just a pullback. For me, I think this is just a pullback for price to come all the way to this point of interest to get more liquidity, to get more fuel, to pump the price upwards to go and give us our higher high. Yeah, so I waited for price to come all the way to this sort of demand zone at this point, and then that is when I entered into the market. Yeah, so at first I went out and drew my Fibonacci retracement tool. Like, I wanted to get the premium in discount zones. Yeah, so I went and cleared the other measurements, like the 61.8, I don't know, that 1.2 or something, those other measurements, and I only remained with the 0.5 and the 1 measurements. Yeah, and then I drew it from the 4-hour swing high. Like, at this point, I drew it from this 4-hour swing low and this 4-hour swing high. Yeah, and then I dragged it all the way, and that is when we got our box where we are going to be playing around. Like, I want to be looking for longs when price comes to the discount zone around this point, and then I want to be looking for shorts when price comes all the way to this premium zone. Yeah, so whenever price comes all the way to this point, price is deemed cheap, and buyers might tend to enter into the market and push the market upwards. And when price comes all the way to this point, price is deemed expensive, and sellers might tend to come into the market and push the market downwards. Yeah, so I drew my premium and discount zone, and after that I went and mapped out my point of interest, which is my demand zone or either my order blocks, because as you can see, we already came to the discount zone, and right now we might want to be looking for longs. Yeah, so I went and drew my demand zone at this point. Like, I saw whenever price came all the way to this point, price shot up and went up. Whenever price came all the way to this point again, price went up again. Yeah, so I saw that that is a valid demand zone, and I mapped it out, and I waited for price to come all the way to this demand zone, and then that is when I looked for my entry model. Yeah, so when we zoom in, we can see that price is just making a series of lower highs, lower lows, lower highs, lower lows, lower highs. Yeah, something like that. And then when we see price making that, we know that we are in a bearish trend. But when price came all the way to this point, I saw that it's losing its momentum. Like, whenever price got to this demand zone, like as you can see, we got this big bullish pin bar or something. Over here we got some sort of doji, because the wicks, the lower and higher wicks are like the same or something. Yeah, like price is just losing its momentum. The sellers in the market are being overwhelmed by the buyers. Yeah, so that is when I knew that anytime from now I might be looking for my entry model to enter into a long position. Yeah, so after that I went down to the lower time frame, to the 5 minute time frame. I waited for price to come all the way to like this point, and then it went down, swept the liquidity that is below these lows over here, and then when it swept the liquidity, price came all the way to this point, and then I waited for it to retrace like to some sort of demand zone or order block that is somewhere over here, and then that is when I decided to enter into the market here. So I waited for price to come and mitigate this demand zone that we've got over here, and the moment it mitigated it, then I decided to enter into a long trade. Yeah, so that's it. That is why I decided to enter into the trade. Right now I'm still thinking of where to put or place my take profit. I'm not so sure as of now, but let us try and see where we can place it together. Yeah, so as you can see, we are in a little bit of a drawdown or something. Yeah, we came all the way up here, and then price decided to maybe mitigate this demand zone again so that maybe we can go up. Yeah, so in terms of my take profit, I think I'm going to be aiming all the way up here. Like I think I'm going to be aiming all the way to this point above these highs that we've got somewhere over here. Yeah, so I'm going to be riding this. If this trade goes in my way, I'm going to be riding it all the way to this 50% level of the premium and discount tool. Yeah, so if price tends to come all the way up here, then my TP will be all the way up here, because over here we've got some sort of imbalance. Price has been so bearish and all, and price must come all the way up here, get into a state of balance, and then that is when we can look for shorts. Yeah, so that is my bias for today. That is what I'm going to be doing today, and let us hope the market won't be so unfavorable for us. Today I want to be talking about something called liquidity. So right now, first of all, we are in a little bit of a drawdown. I don't know what price is doing. As you can see, price is not going anywhere. Like we are just lingering around over here, over this place, meaning that if this high over here were to do its job, then price must already be down somewhere over here, because maybe the volume of sellers who entered into the market at this point were so many that they must push the market all the way to come down here. But because there is not sufficient liquidity, sell liquidity in the market to push the market downwards, then that is why we are just hovering around this point. I don't know this English, what I'm saying. I don't know what I'm saying, but all in all, yeah. So right now, we call this a weak high because it has not made or given us a lower low yet. Because if this were a strong high, we could have just broken past this lower low over this point. Yeah, and gotten our breakout structure at this point. But because it has not given us our lower low yet, then we deem this a weak high. Yeah, so let us just wait and see what price will do for us today. I'm going to be talking about liquidity today. Now, when you talk about liquidity, many people have gotten into this scenario where you think that price is going to be going upwards, and then the moment you enter into the market, let's say at this point, price comes all the way down here, and then it goes on your way. Price just comes down. Let's say you decided to enter into the market over here and then place your stop loss over here. So price just comes down, hits your stop loss, and then it goes on your way. Let us say, for example, for me, I've already entered into this market today. I've entered at this point and I've placed my stop loss over here. So price might just come all the way here, sweep my stop loss or hunt my stop loss, and then it goes on my way. Now you might be asking yourself, what has just happened in the market? Because I've already done my prediction, I've already done my analysis, and right now I just expect the market to go upwards. But all of a sudden, the market just became unfair to me. It went and hit my stop loss, and then it decided to go on my way. You might be asking yourselves, what might be happening in the market for me to deserve this? Yeah. So the thing is, we've got something called liquidity. Let me explain it in a way that even a 5-year-old boy or girl can understand it. So in the market, we've got buyers and sellers. Like we've got people trying to push the market downwards and people who are trying to push the market upwards. And then these people are in some sort of tug of war. You see, the buyers are trying to push the market upwards and then the sellers are trying to push the market downwards. And in that form of tug of war, there is exchange of money. Somebody must be given money and somebody must be taken money from. Like, let's say we are doing some sort of money exchange. I'm trying to take this money and then you're also trying to take the money from me. And then the one who will overwhelm the other one, then that is the one who will have won the game. Yeah. So whenever you get this sort of tug of war between buyers and sellers, that is when we can anticipate for the market to maybe sweep our stop losses, because somebody else must always win. Yeah. And in that form, we've got people called the smart money, these hedge funds, the big banks, and the government services and all, or people who are overseas. You know, those are the people who control the market. Those are the people who give the market enough volume for it to either pump upwards or downwards. So those people who move the market, they'll always try to look for somebody who they can take money from so that they can get enough liquidity to move upwards. So whom are they going to be taking money from? That is us, the retail traders. People who've got this little money that they can afford to lose, because we always tell ourselves you should enter into a trade with the money that you're willing to lose and all. The smart money knows that we've got that money that we are willing to lose, and even if we lose it, we won't lose our minds. Them, they're trading money worth billions of dollars, but us, we are trading like $100. If it goes so far, maybe somebody might be risking only like $100,000 or something. Those are people who have already become professionals in the market and all, and they know that we are willing to lose that money. That is why we have to place our stop loss. And they they have to do something called a liquidity inducement. There's something called an inducement. So what is an inducement? Let us say, for example, you've entered into the market somewhere over here. Like you've said that you are going to enter into the market over here. So you see price come all the way to this point, almost touch your order block or demand zone, and that is when you see price going making this sort of bullish um, momentum. And then after you see this market making this sort of bullish momentum, that is when you decide to enter into the market at this point, because you've got the fear of missing out that the trade might go up without you. So what you do, you enter into the market somewhere over here and then you place your stop loss below this low. And then when you place that stop loss, the market just tends to come all the way, hit your stop loss, get into your point of interest, and then that is when the market goes up. Or let's say in a bearish scenario, let us say, for example, the market is going up. We are making this series of higher highs and higher lows, and then you want to enter at a certain point. Let us say, for example, at this point. Let us say you've got a supply zone at that point. So the market tends to get at this point. And then when it has gotten at this point, you see this sort of bearish momentum. Then you decide to enter into the market at this point because you've got the fear of missing out, or maybe the trade might go might go without you, and then you decide to enter into this point, and then you place your stop loss, let's say at this point, and then the market just comes, hits your stop loss, and then goes on your way. This is what we call an inducement. This is what we call a bait. Like the smart money is just trying to bait you to enter into the market so that it can grab your money, your stop loss, and then that is when it will have taken your money and then gotten that sufficient liquidity for it to go either upwards or downwards. There is this another example where you see the market going upwards and then it comes down, goes up and then goes down. So because you've been told by your price action gurus, or maybe the textbook, or that is the law that you've been taught by the candlestick trading bible, that whenever we've got this double top, you might always want to enter at this point. Whenever we go to this break of structure at this point, at this low, so over here we've got this double top, and you've been told that whenever we get this breakout, you always enter into the market at this point. So you are going to be placing your sell stops at this point, so that whenever price comes all the way to this point, your sell stop be triggered and then you enter into the sell trade. And whenever you just get into a sell trade, price tends to reverse at you. Like whenever you just get into the sell trade, price starts reversing at you, and maybe you've placed your stop loss at this point, so maybe you place your stop loss at this point and then your take profit at this point, so whenever your sell stop is triggered, price tends to come all the way up here, triggers your stop loss, and then we continue with this bullish trend. Like the smart money have already known that this person is going to enter at this point because the textbook or something has told him to do so. And that is when you can just get your stop loss seat or something, and you go on saying that the market is unfair to you, and that is when you might think about quitting trading or something, just because you've been used as liquidity, just because the smart money has taken the money from you just to get the enough fuel to push the market either upwards or downwards. Yeah, so that is what always happens in the market. Like you get a bait, first of all you get baited, and then after you've gotten baited, that is when price tends to sweep the liquidity, take your money, and then it goes on your way. Because price in the market, there must always be a winner and a loser, and most of the time, if you don't spot the liquidity, then you are always the liquidity. You are the person who is going to be giving out your money for charity in the market. Yeah, so for me, I think I'm almost giving out my money to charity in the market today. As you can see, price has just come all the way to this point, almost hitting my stop loss, whatever. So if price goes all the way and hits my stop loss, then I think I'll be the perfect example of a liquidity sweep. Yeah, but as you can see over here, this is some sort of liquidity sweep. I've already seen it because price came all the way here, and then it went up, showing the retail traders that the market is about to go up. So the retail traders entered into the market at this point, and then they placed their stop loss at this point, and then after they placed their stop loss at this point, price came, boom, sweep their stop loss, and then it went up. That is why I always recommend for any trader out there to be using like to give their trade like some sort of breathing room, to give their stop loss some breathing room, so that whenever price sweeps liquidity, their stop loss is not hit here. So liquidity, as you can see, right after the price swept liquidity, as you see, it's like pumping up in a very, very big volume. Now that is what we call liquidity, because many retail traders place their stop loss at this point, and smart money knew that always there's going to be a lot of money at this point, so they went and took the money, and that gave them some big volume, and that is when they enter at a large volume for a buy trade and push the market upwards. Yeah, So that is what is liquidity is. And mostly liquidity, you can find it in a double top, above this point. Like the textbooks have told you that whenever you see a double top, then you will know that price will just go downwards. Whenever it breaks this point, then you place your stop loss at this point, but price will just tend to come, sweep your double top, and then go on your way. And also double bottoms, we've got some sort of is it support? Yeah, support at this point. So the textbooks have told you that whenever you see this breakout, you enter into the market at this point and place your stop loss at this point. So price will just tend to come, sweep your stop loss, and then boom, it goes in your way. Another point where we've got liquidity is when you draw your trend line. Let's say you've got this series of higher highs and higher lows, and then you tell yourself that this is your trend line or something, and then they tell you to enter when the retracement is over at this point. Let's say you've seen your retracement is over. Let's say you've got a big wick at this point, and then they tell you to enter when you see a pin bar or something. The smart money already knows that you are going to enter at this point, and you are going to be placing your stop loss at this point. So price will tend to just boom, sweep your liquidity or your stop loss, and then go up. Or in a downtrend, you've got this sort of lower highs and lower lows. You've got your trend line at that point. So the textbooks tell you that whenever you see a bearish pin bar and it closes below the trend line, and then you're going to be entering at for a trade at this point, and then you're going to be placing your stop loss at this point. Price, the smart money already knows that you're going to be placing your stop loss at this point, and that is just liquidity lying above that trend line. So price will just tend to boom again, hit your stop loss, and then goes on your way. And then you start blaming the market that it's playing unfairly to you. And that is what we call liquidity. And that is why I don't trade price action nowadays. Like, I don't use these sort of indicators. I don't know what. Again, let's say the candlestick trading Bible told you that the market will always be going upwards, downwards, or sideways. Let's say you want to trade this sideways market. Let us say this is your support. This is your resistance zone, and this is your support. So you just see price coming like up, down, up, down, up, down, up, down. So they tell you that whenever price comes to this resistance zone and you get this bearish pin bar, you enter at this point, and then you place your stop loss above this resistance zone, and then you ride all the way to this point. Then price might just tend to come, sweep your stop loss at this point, break out, and then just come down. And some people might see that this price has broken out, maybe it has come past the pin bar, and some of them might decide to enter for a buy at this point. And whenever they enter into a buy at this point, they'll be placing their stop loss, let's say down here. So price will just come up, sweep the liquidity for the people who entered for a sell, trigger the buy stops for the people. For the buy stops for the people who decided to trade the breakout, and then boom, those people trade the breakout, their stop loss get hit, and again, that is liquidity. Or maybe you've decided to wait for the market or the price to come all the way to this point at this support level. There are people will be telling themselves, I'm going to be trading this breakout, and some of them might be telling themselves that whenever I see a pin bar, then that is when I'm going to be looking for buys, because the candlestick trading Bible told me to do so. So they wait for price to come all the way to this support level, and then they decided to, for those who decide to enter for buys, they enter for buys here and place their stop loss right here, and then boom, their stop loss gets hit. And for those people who decided to trade the breakout, they see that price has already broken out past this support level. They decide to enter for sales over here and place their stop loss here, and again boom, price reverses, hits their stop loss. And that is liquidity. That is what we call liquidity, and that is what smart money does to you. And again, that is why I don't trade price action, because I'm always going to be baited. Like, I'm always going to be used as liquidity whenever I trade price action, and that is why I decided to shift to market mechanics. Yeah, so that is liquidity. And again, I repeat, if you can't see the liquidity, then most likely you are the liquidity. For me, I saw like this is already a liquidity, because another point where liquidity mostly lies is in higher highs and higher lows. Maybe in higher highs, higher lows, higher highs, there's liquidity lying above these higher highs and also these higher lows, because somebody might be trying to trade this retracement or something, maybe trade it down here, and then place their stop loss above this highs. So price might just come, hit their stop loss, and then go their way. So you must always be keen for liquidity sweeps, so that you are not used as liquidity, because that real that thing really hurts. Like, you just wait for price to, you see price enter your point of interest, and then it hits your stop loss and then goes in your way. Like, that thing really hurts, and if you are not careful, then that is the end of you. Yeah. So as you can see over here, we got liquidity below this lows, this lower low. There is liquidity lying below this lower low. So price tend to come down, sweep the liquidity, and then as you can see, price is just going upwards right now. Yeah. So that is all about liquidity and inducement. So take care that you are not induced or baited to enter into either a long trade or a short trade very early and be used as liquidity, because that inducement, when you are told to enter at this point, and then when you enter at that point, you be used as liquidity, then that inducement, you being baited to enter into the market really early, is what makes you lose that trade. Yeah. So let us come back. I hope you've understood the liquidity, uh, what I've been talking about liquidity, because this thing is very crucial in the market. If you don't understand it, then that is the end of you. Yeah, so I decided that I'm going to be doing like this sort of classes whenever I trade live. Like right now, I'm trading live, and I'm going to be spitting out some gems in terms of things related to trading. So today I decided to do the liquidity classes and all, and I hope you understood what I've been talking about. Yeah. So right now, let us go back to the trade. The trade is going well, not bad. As you can see, price came and swept the liquidity that is below these lows over here. It swept the liquidity. For those people who entered for longs at this point, they placed their stop loss below this bullish pin bar, and then when they placed their stop loss at this point, price just came down, swept the liquidity, and then as you can see, price is just pushing downwards, upwards. Yeah. So price is going up at a really fast rate. So let me just think of where I can place my take profit. We're up about 118k. Oh, $118 down. $118. Nothing too big, you know. So let us wait and see what price has for us today. I'm back. So I had been sent somewhere, and then while I was on my way, like, we went so up. So right now we are about 203 USD up, 203 USD, 205. Yeah. So right now we've reached at this kind of order block. Yeah. This supply zone, I think so. Yeah, this supply zone, and that is where price is reacting at. And I think, should I close? Okay, let me close. Let me close. Damn, I can see price is reacting heavily on this order block. So let me just close. So we are about 190 USD. Yeah. So there we go. Or should I hold? Should I hold it? Okay, let me just close, man. 188 USD. 190. Okay, let me just close. So there we have it. Brr, boom. There we go. So today we've made about 193 USD. Yeah. So we've made around 193 USD. I told you yesterday that yesterday we made $71, and today we've made 193 USD. So in total we have about, let me see, 193 plus 71, $264. Like, we are past halfway our weekly goal. So I told you guys that I'm going to bounce back heavily, because yesterday I was not so satisfied with what I had got, because um, I closed the trade a little bit too early. Like, daily I want to make like at least $100 or something, and today we've made like 193 USD. Yeah, so I'm satisfied with that. Because I've got some other things to do, so I won't stare at the charts all day long. I've got some other chores outside there, so allow me go and do them. But today we've made 193 US dollars, and luckily the day that I decided to do a short course on liquidity is when I made $193, because if I would have lost this trade while speaking about liquidity, it would have been a little bit ironical. But today I've made 193 USD and I'm satisfied. It has like masked yesterday's small profit. Yeah, so we are up like $264 on day 2, and I'm really glad about that. Yeah, so before I end this trading session, I want to thank you all guys for allowing me bounce from 54 subscribers all the way to 78 subscribers. So right now we are at 78 subscribers, and I think we are about to hit the 100 subscribers mark. Yeah, very soon we're going to be hitting it. So the more I keep posting, some people end up subscribing. So in less than like 3 days I've gained like almost 25 subscribers. Yeah, and I'm really grateful for that, because I can see that people like my content. And to also all my friends who have been supporting me, thank you. And right now let us hit the 100 subs 100th subscriber mark. I don't know how to pronounce that. 100th something. Yeah, so let us hit the 100th subscriber mark, and I'll be so grateful to you guys, and hope you've enjoyed the lesson. Yeah, so remember that if you cannot spot the liquidity, then most likely you are the liquidity. So let me see what kind of risk to reward ratio we've gotten today. I closed at 34,083. 34,083. Yeah, so I closed around here, and today's risk to reward ratio is 1 to 5.28. Yeah, and I'm really glad that I've got this trade, because catching a trade like this is not something to joke on. And thank you guys for watching me. Remember, do something with your life. It's never too late. Bye bye.